Hey, what's up guys? My name is Daniel Lopez with Invest in You Finance, and today we're going to be talking about the stock market and how the stock market works. I think it's very important for you guys to learn and build a good foundation for learning everything you need to learn in order to be financially independent. Whenever I first started learning about finance, I had to put in the hours, I had to put in the work, I had to research everything on my own. And Google was my best friend. I would just type in everything that I wanted to know, and Google would tell me or lead me in the right direction. So guys, I highly recommend watching videos, checking out other people's channels, and learning from everybody, because maybe you can learn something from me and then maybe you can learn something from someone else, but you're gonna keep learning all the time and you're never gonna stop learning. So it's very important to watch videos, research, and look up all these topics. So let's get into it, guys. I'm going to show you guys an article that I found about the stock market. Hopefully it gives you a better understanding of what's going on, and let's roll the clip. What is up guys? Today we are here to talk about the stock market, become financially independent, and just overall get educated, because we need to build a foundation if we want to become financially independent. Okay guys, I found this article by NerdWallet. I want to share it with you guys. Please sit back, relax, and enjoy. Let's have a good time. What is the stock market and how does it work? The stock market is where investors connect to buy and sell investments, most commonly stocks, which are shares of ownership in a public company. The term stock market often refers to one of the major stock market indexes, such as the Dow Jones Industrial Average or the Standard & Poor's 500. When you purchase a public company stock, you're purchasing a small piece of that company. Because it's hard to track every single company, the Dow and S&P indexes include a section of the stock market, and their performance is viewed as a representative of the entire market. You'll usually buy stocks online through the stock market, which anyone can access with a brokerage account, robo-advisor, or employee retirement plan. You don't have to officially become a quote-unquote investor to invest in the stock market. For the most part, it's open to anyone. The stock market is regulated by the U.S. Securities and Exchange Commission, and the SEC's mission is to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. In 2001, the SEC launched a public service campaign to encourage new investors, particularly those in historically underserved communities, to use the stock market to build long-term wealth. You might see in the news headlines that it says, the stock market has moved lower, or the stock market has closed up or down for the day. Most often, this means the stock market indexes have moved up or down, meaning the stocks within the index have either gained or lost value as a whole. Investors who buy and sell stocks hope to turn a profit through this movement in stock prices. How does the stock market work? The concept behind how the stock market works is pretty simple. The stock market lets buyers and sellers negotiate prices and make trades. The stock market works through a network of exchanges. You may have heard of the New York Stock Exchange or the NASDAQ. Companies list shares of their stock on an exchange through a process called an initial public offering, or IPO. Investors purchase those shares, which allow the company to raise money to grow its business. Investors can then buy and sell these stocks amongst themselves, and the exchange tracks the supply and demand of each listed stock. That supply and demand determines the price for each security, or the levels at which stock markets participate. Investors and traders are willing to buy or sell. Buyers often bid or the highest amount they're willing to pay, which is usually lower than the amount sellers ask in exchange. The difference is called the bid-ask spread. For a trade to occur, a buyer needs to increase his price or a seller needs to decrease theirs. This all sounds complicated, but a computer algorithm generally do most of the price setting calculations. When buying stock, you'll see the bid-ask and bid-ask spread on your broker's website. But in many cases, the difference will be pennies, and it won't be much of a concern for a beginner or long-term investor. Historically, stocks trade likely took place in a physical market. These days, the stock markets work electronically through the internet, online stock brokerage. Each trade happens on a stock-by-stock basis, but overall, stock prices often move in tandem because of news, political events, economic reports, and other factors. What is the stock market doing today? Investors often track the stock market's performance by looking at a broad market index like the S&P 500 or Dow Jones. The chart below shows the current performance of the stock market as measured by the S&P's 500 closing price on the most recent trading day, as well as the S&P 500 historically performance since 1990. 20% return year to date and 14.56 return over the 10-year period. What is stock market volatility? Investing in the stock market does come with risks, but with the right investment strategy, it can be done safely with minimal risks of long-term losses. Day trading, which requires rapidly buying and selling stocks based on price swings, is extremely risky. Conversely, investing in the stock market for the long term has proven to be an excellent way to build wealth over time. For example, the S&P 500 has historically averaged annualized total return of about 10% before adjusting for inflation. However, rarely will the market provide that return on a year-to-year basis. Some years, the stock market could end up down significantly, others up tremendously. These large swings are due to market volatility or periods when the stock prices rise and fall unexpectedly. If you're actively buying and selling stocks, there's a good chance you'll get it wrong at some point. Buying or selling at the wrong time, resulting in a loss. The key to investing safely is to stay invested through the ups and downs in low-cost index funds that track the whole market. So that way, your returns might mirror the historical averages. Guys, this concludes the article. These charts, I'm just trying to show you the period from 5 days, 10 days, a month, 3 months, 6 months, a year, 5 years, just so you can see that there are sharp drops in these graphs. And that's market volatility. So at some point, your portfolio could be up, tremendously. But at some other point, for example, my portfolio has been down hundreds of thousands of dollars. But during those times, you can't freak out and you can't sell, because just know that eventually with time, it's gonna go back up little by little based on what has happened historically. So it's not okay to panic and sell. Like this article's saying, you just have to stay in it for the long run. And guess what, guys? That is a good buying opportunity. When you see a 10% correction or you see a 20% correction, that just means that, hey, the stock's on sale, guys. Let's go buy up as much as we can. So never freak out and just know that everyone's portfolio is down. So the best thing to do is hopefully you have some money so that way you can buy the stock at a discount price. Anyways, guys, this concludes the video for the article. Thank you. Okay, guys, now that we know what the stock market is and how it works, I want to talk about investing. The next video that I'm going to make is going to be on how to start investing. Yes, we're going to get into the good stuff and all that, but I just want to share with you guys my current strategy. And my current strategy is just to buy and hold index funds. Because now that you know that the S&P 500 is basically a collection of the total stock market, you know that by investing in an index fund, which is investing in a bunch of companies, you know that on average, you're gonna get between a 7 to 10% return. And guys, that's all you need to become financially independent. What you need more than your return is capital. And by capital, I mean you need to make money. There are so many ways out there online to make money that you need to figure out, how can I make money? I know people who make a ton of money, but guess what? They do not have the foundation of these principles. They don't have a foundation of investing. They don't have a foundation of anything money. So they're making all this money, but they don't know how to invest it. So they're living paycheck to paycheck and they're not saving or investing any money. So I want you guys to learn first the foundation principles before really getting into it. And after you learn the foundation principles, then you can get your feet wet and start out little by little. But you need to make money. You need to go get a job. You need to mow lawns. You need to make a business. You need to somehow get money. My cash cow was working my corporate job. I had a mechanical engineering degree. I was working in the oil field from 2011 to just last June, and I worked the entire time at my corporate job. Throughout this whole entire time that I was working there, I was getting a promotion every year or getting a bonus or getting a pay increase. So you have to make money, and this is how you're going to be able to invest in the stock market. It doesn't take that much money to invest, and you have to start as early as you can. The earlier the better. I started investing in my 20s. Now I'm in my 30s. That time has allowed my money to grow. So that is what's very important. What's very important is that you start today, you start investing, but you need to learn a little bit of basic finance, a little bit of stock market and things like that. But you need money. That's the important part. I'm gonna teach you guys how to invest your money. And I need you to help yourself to make the money that you need to invest. Guys, I wish you guys the best, and I want you guys to become financial independent, just like I am. I was able to accumulate over $1.5 million in net worth before the age of 35, and I wish all you guys the best. I want you guys to make more money than me, learn from my mistakes, and grow to be just whatever it is you want to be. But guys, I want you guys to actually have a plan. I want you guys to manifest something that you think you can achieve and shoot for the stars. What I wanted was $1 million in 10 years. I made a little bit over $1 million. Should I have gone for more money? Probably. But the point is, I made it, guys. I reached my goal, and now I want you to reach your goal. So guys, please Stay tuned. I'm gonna have another video coming out on how to invest in the stock market. I hope you guys found some value in this video. I appreciate you guys watching. Thank you guys so much. If you could please smash that like button, subscribe. It would really help me out. I really appreciate it. I'm just getting started out. Take care, guys. Till next time.